My background is I'm a yuppie elite. I was a management consultant at one of the best firms, Bain and Company. Went and got my MBA at Stanford, one of the best business schools. Learned business, learned finance, learned money through these blue chip environments. And it was all Keynesian. No mention of Austrian economics ever, maybe as the butt of a joke. And, I was deeply steeped in that. At business school, I got interested in Ethereum because I heard about it in a few places at Stanford. And then I kind of stumbled down the Ethereum path, into altcoins more broadly, totally bypassing Bitcoin. And this was 2016. And thought I was really onto something in 2017 when that thesis was working great. And then I got my ass handed to me in 2018 in the bear market there that hammered everything that wasn't Bitcoin. And that forced me to go figure out, taking a step back, I had started an altcoin hedge fund in 2017. And pretty much at the top. So then I got my ass handed to me, and then my investors were along for the ride. So it was brutal. It was absolutely brutal year and a half there. And I had to figure out what was I missing? Why was I wrong about altcoins? Why was Bitcoin doing better? What's here that I'm wrong about? And that led me to, a series of, really it was a couple books in sequence that I read that cracked it open for me, of The Price of Tomorrow by Jeff Booth. And then Ray Dalio's Changing World Order, which he doesn't, he's not a Bitcoiner, but it sets the tone for the world reserve currency changes every 100 years or so. And his sort of conclusion is China is ascendant. And, that's fine. That's a fine conclusion because he's not a Bitcoiner. But once you understand Bitcoin, you start to think the internet is ascendant. And so an internet native world reserve currency makes more sense than anything else. So those two, and then bullish case for Bitcoin, just an article back then. And then finally, I was ready for the Bitcoin standard. And that just undid my MBA. So totally replaced my Stanford MBA in one book. And I hated parts of it. It was really hard to get through. And it, made me, there were a lot of things I had to wrestle with because my existing worldview was non-compatible with some of the things that Saif was arguing. And I had to get through that dissonance and realize that he was right about everything. And that was the beginning of my Bitcoin era and Bitcoin epiphany. And as you know, and probably everyone listening to this, that the first 6 to 12 months that you're in that, new landscape, it's euphoric, it's exhilarating, it's, all you want to do is talk about Bitcoin and how you want to wake up everybody around you because it's so obvious now all of a sudden to you. And, I went through that process and everyone in my world started to, ignore me or not want to talk to me or brush me off, or I was going crazy, right? I was going off the deep end. And that led me to some of my first contributions to Bitcoin. So I started using my management consulting toolkit, which is really crunching numbers in Excel and then turning that into graphics in PowerPoint to present the insights. So I did that for a variety of topics around Bitcoin. And then I wrote Why the Yuppie Elite Dismiss Bitcoin, which is really about my personal journey and the frustrations I was facing with my friend group who continued to ignore Bitcoin. And then, I've just been contributing to Bitcoin ever since. And that one resonated with people a lot. And some of the other articles I've written since have also really struck a chord with people for various reasons. And then the other big thing I have been pleased to make a bit of a mark with was I put out my analysis of Bitcoin's full potential valuation. And Michael Saylor kind of took that model and adopted that framework as his own valuation framework, and then added to it and adjusted some assumptions, which is what I wanted people to do with it. So you probably see Michael Saylor present some of my slides, and that's been really cool too.
It's quite a journey. I'm going to link the Yuppie Elite piece in the show notes here for anyone who hasn't read it. But can you kind of talk through the core thesis there? Because that was I read that pretty early in my own Bitcoin journey, and it just kind of really perfectly encapsulated what I was feeling when talking. I have a lot of, all my buddies from college are they work for very large banks. They work in some sort of high corporate finance. They are at that level, right? And, and it's I love these guys. I wanted them to try and go down this Bitcoin rabbit hole. Some now years later have begun to, but at the time I was just like really frustrated with it. Like, I know these guys are smart. Like, why are they missing this? I read your article and I'm kind of like, okay, so can you walk through kind of that core thesis of that a little bit? Because I just think it's really powerful.
Yeah. So I guess the starting point for it was back in 2020. There was a meme going around that was like, people on the IQ bell curve on the far ends, on the very smart people and the very stupid people are both bullish on Bitcoin, and the people in the middle are like, well, actually, like, here's why it won't work. And that was a popular meme. But it scratches some itch, like it speaks to some part of the truth. But there I was with my Stanford MBA friends, knowing that they're all like on the super smart extreme end of the spectrum, and none of them are into Bitcoin. They all are the most dismissive people in my life. So, I thought about that for quite a while, and like, there's something else here as well. And I kind of realized that the main difference between my Stanford MBA friends and the Bitcoiners that I was interacting with on Twitter, there was a political rift between them, but it was really like a worldview rift. And it seemed to be more about like, what do you believe? Like, what sources of information do you trust? What do you think about the, establishment narrative of this or that? And the Bitcoiners all distrust, very disagreeable, distrust establishment narratives and what you're told to believe and yada, yada. And my MBA friends kind of just, party line on most topics. Certainly political topics. And so it started to crystallize to me that the difference is one of trust, and trust in the system, trust in, what you're being told by authority, and that MBAs, the yuppie elites, as I characterize them, to sort of include like doctors and intelligentsia in general. They're high intelligence, but high trust. And then Bitcoiners are high intelligence, but very low trust. So they're kind of the two extreme corners of a 2x2 matrix. And I, centered the article around that insight and teasing out what secondary effects come from that. Yeah, like if that is a reasonable representation of the world, what kind of second order conclusions can you draw from that? And it does kind of line up with how I experience Bitcoin and my yuppie elite reactions to Bitcoin. And then, the point of it too is to point out that the people who have invested so much time and energy in the system are not very quick to question the system and to say, I've spent my whole career in business, in finance, going to the best schools, learning from the best professors, and all of that's wrong. And these guys on the internet are right. So I think that's a big part of why the more credentialed a person is in business and finance, the less likely historically they have been to consider Bitcoin on its own merits. I think it's such a good point. It's kind of like an intellectual sunk cost bias, whereby, okay, I've sunk so much into this education, into my worldview, into just my identity as like, this is who I am. What you're trying to tell me right now completely throws that on its head. It completely flips the script. And like, to your point, reading, the Bitcoin Standard, it's like, I give you credit for coming from that world and then being able to kind of go through the process of saying, shit,
This was recommended by a top doctor from Austin, Texas, and it's genius. Dr. Marlene Merritt has helped thousands improve their health naturally. Now she's helping people find nerve pain relief. She discovered a surprising link between plant root systems and human nerves, leading to a pain relief breakthrough. Tap the link to see her
probably wrong about a lot of this, not necessarily through a fault of your own, just because this is the pipeline that you came in on. Like, this is the path you were on. It's natural that pathway would develop these certain characteristics within you, certain worldview characteristics. But to then be able to shake that, like, we clearly see that's not very easy to do. Otherwise, a lot more people would get Bitcoin, right? Yeah,
it's not very easy to do. And I think, there's an interesting thing there about, like, every Bitcoiner, it's a fun exercise to think about, like, what are the reasons why you are here ahead of most people? Like, I think every single Bitcoiner has a different set of characteristics that make them, differentiated and open to Bitcoin this early. And I think that's different for everybody, but, some of the commonalities are like, distrusting authority or, having been exposed to Austrian economics or libertarian ideology, these things help. Like, for example, several early Bitcoiners that I can think of spent some time in Argentina, and saw the currency collapse fall out from that. Vijay Boyapati has a story of watching his dad have to carry their family net worth in gold on a plane going from India to Australia. And wow, that's a formative experience. So anyway, I think each Bitcoiner has their own unique characteristics and circumstances that made it so that it was possible for them to get to Bitcoin this early. For me, I think another element of it was like the reason that I made it faster than any of my classmates, as far as I know, is I think that the trauma of running a crypto hedge fund and being so wrong that I had to figure out, I had to be open to this crazy possibility that the Bitcoin maximalists were right, and I had to be willing to consider their view. It took me a couple of years to get to that point of being so wrong that I was willing to consider my worldview being wrong, but I finally got there. There's I think about in high school biology class, we did like a lab where you basically trick bacteria to take up a gene, like a gene that makes them glow, and the way you do that is by heat shock. So you expose them to hot and then cold and hot and cold. And it's so traumatic for them that they're like willing to take up some new DNA to try to survive. And, I think there's some similarities there.
Is this the Is this the moment where all of the like dividend hero bros on Twitter are finally like, oh wow, here's a high yield dividend stock. You know what? Maybe this whole Bitcoin thing's not so bad. Maybe I'll get myself some STRK. Like, is this what finally brings the dividend bros around?
Maybe. Yeah, I think that this just broadens the appeal of what MicroStrategy was already doing. Like they were issuing convertible notes. I guess you would call them sort of private placement convertible notes, where you'd have to be a capital allocator on the buy side, I guess, in the debt market to be aware of and have access to their convertible notes in the past. And now anybody can hand over their dollars that they want to get, that they think of as, this is my fixed income allocation. And you're going to hand over those dollars in exchange for STRK shares, which pay this incredible dividend. But Saylor is going to take those dollars and buy Bitcoin. And so it just like greatly expands the portion of the bond market that Saylor now has access to, entice away from holding US Treasuries and other stupid paper, and now attract away to a better bond that has all these incredible benefits, and it happens to be powered by Bitcoin.
That's the key, is that he's, making it so that people could just give them, cheap money, to buy into Bitcoin. And anybody could, go to those market and get it. Not quite sure if it's traded on NASDAQ or not, but I wonder, hold on, let me see. Is there, incorporated. So this is the bond market for it's the same balance sheets. So that's MSTR. Okay, so this is the equity market. Okay, so again, those are the products that he was created to be able to take advantage of the bond market in that sense. Again, competitive to, treasury bond, right? So it depends on how people realize that is the, again, risk is Bitcoin for sure, right? For this company's downfall, if Bitcoin were to, not even the liquidation, let's say the lower Bitcoin is coming down, the more and more people would buy into those bonds of MSTR. So that's the idea, right? Because people want exposure to Bitcoin. And then those bonds is going to become more and more enticing in terms of fixed income. Like, again, if you could return 5% with no risk, of course you're going to take that. In this environment, right? When every single central banks out there in the world are slashing rate like crazy, because MicroStrategy offer 5%, people are like, yeah, I want some exposure to that. And so people, when they say, well, a liquidation level is going to be 50, if it hits $50,000, then MicroStrategy is going to be in trouble. Not quite how that worked, because they're only in trouble for the liability of the bonds that was issued, that is due to this year, right? And the way that Bitcoin works is that it doesn't stay down forever, right? If you buy it at any point in time, and I think 5 years bond is a genius idea, because throughout the history of Bitcoin price, if you buy it for more than 4 or 5 years, you're in profit. Even if you the most unlucky person in the world, that every time you buy at the top, you still come ahead right now, right? So with this panic, yes, possibly, it could hit at this price level right here, but the whole idea is that it won't stay there for long. Somebody's gonna want exposure to Bitcoin when they hear it. And even if it comes down to like $50,000 here, more bond would be issued at a higher rate to get people more enticed to buy into that. But again, he could just issue the bond just enough to cover, the next 6 months of expense, right? And so, again, to me, he still have room to run because of the amount of Bitcoin he has. And if nobody gives him bonds, then okay, just sell enough just to cover that one year or 6 months worth of expenses. I mean, what can you do, right? But I think he would most likely to dilute the common shareholder first before he would ever sell Bitcoin. Yes, in which case, people gonna have to hedge in some other way. But the bonds is what entice people more. And for common stock shareholder, what they could do, they could buy the bonds, to hedge their position as well, so that the downside eventually is going to come back, type thing. So yeah, it's seemingly win-win strategy for now. So let's see. In my opinion, but let's listen to this real quick. I have. Let me see. Not that guy. Okay. Okay, this guy is...
You buy Bitcoin, you hold it for more than 4 years, Joe. That's my advice to everybody.
Fair to say you simply flooded the system with money.
Yes, we did. That's another way to think about it.
Where does it come from? Do you just print it?
We print it digitally.
I'm very bullish on the long-term viability of Bitcoin.
Thank you, guys. Really appreciate you having me on. And I totally agree. It has been the most interesting area, and it's certainly given me plenty to talk about. So it's been fun.
But this one is two weeks ago before Bitcoin crashing. And when I say crash, you guys, it's going to come back. Calm down. We'll be fine. We'll be fine.
Yeah, maybe that's actually a quick place to start is, were you speaking out publicly about Bitcoin or anything related to Bitcoin before MicroStrategy? Because my take on it is that maybe it wasn't until your research into MicroStrategy that you felt there was a need to kind of be more outspoken.
Yeah, so it kind of depends. On the internet, no. In my personal life, obnoxiously so. Yeah, I was definitely the person in my friend group and in my family group that was always harping on Bitcoin. I was lucky enough that I found it quite early for the first time. Everyone screws it up once, and I screwed it up in 2013. So, I'm in that cohort where I thought I was a brilliant trader, and you buy a Bitcoin for $270 or whatever it was back in November. And then you sell it when it pumps and you think you're a genius, and it goes into a bear market, you still think you're a genius. And then you spend a little bit more time digging into it and you realize exactly what it was that you gave up. And then you totally shift your mindset and you want to do nothing but accumulate more of it. So it takes a little while. I think everyone has to go down that journey. You got to get wrecked by all the altcoins once or twice before you figure out that that's just a casino. And then you just focus in on the one asset that you can truly articulate the value proposition for. And it makes your investing life a lot easier. But publicly, really not. During COVID, I kind of went into a dark hole in my basement for a while, started doing a lot of software development work, building trading tools, building basically algorithmic trading for digital assets. And then MicroStrategy really emerged. And early on, I hadn't really put a whole lot of thought into what they were doing. I just noticed that this was really the first corporation that wasn't aligned to the Bitcoin industry at all, so it's not a miner, that came out and started acquiring Bitcoin. And that piqued my interest enough to invest in it because I was just telling myself, I'll invest in anything that's investing in Bitcoin at this point, right? I just want the asset to succeed. So if MicroStrategy at the time was buying Bitcoin, then I was going to support them by buying the equity. That was really as deep as my thesis was early on. And then over time, as it evolved, it changed a little bit. And I come from a commercial banking background originally. So I watched a few of the steps that they made, particularly when they were taking out secured debt, that really bothered me actually early on and made me a little hesitant about the trade because I was a commercial credit analyst during the global financial crisis. And so I saw the impact that volatility in markets can have on what used to be really good businesses. And MicroStrategy wasn't a growing business, but it was a pretty strong business from a cash flowing perspective. It was just becoming a zombie because the growth prospects had died because they're competing against giants like Microsoft and some of the others. So when they went the secured debt route through the banks, it made me really nervous because I knew all the terms and conditions that could trigger a liquidation on them that they couldn't even necessarily control, particularly given the volatility that Bitcoin just has as an asset. And banks hadn't matured enough to really understand that. So you knew that they would have kind of a hair trigger to shut that one down if they got the chance. So it made me nervous, but then I saw them evolve the strategy that they had and start moving more into the convertible debt market. And that's non-recourse debt that made me much more comfortable. And after a while, I was kind of wondering if anyone else was even paying attention to this, because I was talking to people in my personal life. My dad's a financial advisor, so I was talking to him about it, and nobody had any idea what they were doing. So I fired up an X account, and that was about a little over a year ago, maybe, kind of the beginning of 2024 was really the first time that I ever started talking on X. And I was just trying to find people that were focused on the same thing I was. And that was how I got connected to a lot of the True North guys. So Jeff and Ryan originally, and I ended up doing a podcast with them. And that was the first public appearance I'd ever made. And it kind of spiraled from there because all of a sudden a lot of people got interested, right? Performance breeds interest for sure. And that was 100% true with strategy. And people were just captivated by the story. And I was too. And so you want to follow all the iterations of it. And it transformed a lot of things because eventually it became a part of my business. So most of what I do now is consulting for companies that are wanting to implement a strategy like this. And they want someone to come in and help think through their individual situation, look at the strengths of their business, and come up with a good strategy that they can implement successfully over a long duration of time. And so it completely changed what I was doing for a living. I'd left the consulting world and the traditional corporate world back in 2021, I believe, and kind of ventured out on my own. And this kind of brought me back in. And so now you're back in these corporations, hearing the conversations they're having, talking to the bankers, hearing really the stance shift from Wall Street about what this is, because they've realized what partners these companies can be to them. And just being able to see that interest level evolve, both from the retail side and from the corporate side, has just been a really cool seat to be in over the past 12 months. So it's been a lot of fun, and it's been a ever evolving journey.
Yeah, and we're doing something pretty similar here at Acropolis, kind of serving as an outsourced Bitcoin treasury team. So yeah, we're seeing a lot of the same things you're seeing, I'm sure. But for this first line of questioning, I kind of have like a three-part question, but we'll take it piece by piece because there's kind of a point that I want to uncover at the end of this. So let's start here. If MicroStrategy's capital raises grow faster than Bitcoin's price, which has been the case so far, then theoretically, would you agree that the number of Bitcoin that they can buy each year should actually be growing in Bitcoin terms, right?
Yep.
Okay, so I guess first part of this question then, do you expect the size of their capital raises to continue to outpace Bitcoin's price?
In the near term, I would say yes. Right now, I think that the markets have really opened up to what they're bringing because they're bringing unique products that haven't really been seen before. And I think that that's generating a lot of interest from the capital markets that opens up these deep pools of capital. And we're really watching the foundation of that being built right in front of us right now. You know, people are very confused when they start doing all the different offerings, mostly because it's a new thing to learn. But the convertible bonds, you saw them come out there, and then they were the number one convertible bond issuer. Now you've seen them venture over into preferred. Strike was one of the best performing preferred stock offerings ever. Now you're seeing them come out with Strife, a different type that's targeting a different type of investor, right? Strike is really focusing on total return investors, so people that do want some of that equity upside to it. Whereas Strife is really focused on the true yield investors, the long duration, very steady type of investors, some of your pensions and those types of things. So they're opening up all these new pools of capital. And while they're doing that, I think that the rate of change in the amount of capital that they can raise is going to continue to increase. And they've got such a head start that they're the only one really doing it at scale, where if you want to be an investor with a company, you want the one that's wildly over collateralized on all those obligations. And that's strategy today. So for right now, I absolutely say yes. I think that they're going to continue to be able to increase that probably for several years still. What the future looks like is going to be largely dependent on how many other companies enter this space and what type of market share they're able to capture. But when you're talking about the fixed income market in a $300 trillion market, it leaves a lot of room for growth. Mm-hmm. And if all of these different products that they're bringing to the market continue to grow and perform in the way their past ones have, I don't see the investor appetite drying up for that anytime soon.
Right. And theoretically, though, as long as there's a premium on the share price to current Bitcoin holdings, they are going to be able to continue raising capital faster than Bitcoin's price, right?
Yeah. Yeah. And the premium really applies largely, though, to the common equity. Right. That's where people look at that premium arbitrage. And they've started to shift away from that. And you start to hear them talk more about using that as a balancing tool for the leverage ratio. Right. And so until they're in trouble of getting out of their leverage ratio range, so if Bitcoin has a serious pullback, I think that they're looking for ways to alleviate that part of the equation. And now they can focus on some of these other fixed income offerings where you don't put the same type of pressure onto the common equity anymore.
Right. And so one of the things that attracted me to MicroStrategy first was that, yes, it's levered Bitcoin, but it's also Bitcoin at a smaller market cap. And so the idea is, of course, law of large numbers. And the bigger the market cap gets, the harder it is to 2x from there. And so my thoughts were basically, oh, okay, I can get Bitcoin, but at a smaller market cap, I should be able to get, higher multiples on this investment. But so if Bitcoin, the asset class, has law of large numbers, diminishing returns over time, and MicroStrategy is always this slightly smaller market cap that can, because of the premium, always raise capital that allows them to buy even more and more Bitcoin each year in Bitcoin terms, then I guess what is to stop MicroStrategy theoretically from buying all of the Bitcoin on a long enough time horizon?
Well, you got to have enough people that are going to give it up first, right? I mean, that's a big component to this. And it's interesting when you look at, even if you just zoom out a little bit, you look at the bigger trade, right? The Bitcoin trade against the US dollar. So you look at something like the US dollar, where if you're the Fed and you're trying to really focus on price controls, right? You're trying to keep prices down on things. Something has to give in the equation. Typically, that's going to be the supply, right? The supply is what's going to have to give if you want to keep the number on the price lower. If you want to take the opposite side of that trade, you need to find something that has the exact opposite dynamics. So in Bitcoin, there's one of two things that can give. It's either the price or the supply. Well, the supply is not going to give. Ultimately, the price is what's going to give. So yes, if you look at that law of large numbers on increasing their capital raises and increasing Bitcoin, I would view that as probably, putting a time frame on it's a little tough. I'm going to say for 5 years, they've got a full advantage in that aspect where they're going to be able to keep doing that. And it gives strategy the ability to outperform, potentially in Bitcoin terms. There is a diminishing yield return long term, right? I mean, that's just the math overall. So right now, the main focus for them is on Bitcoin yield. And if you look at the math behind Bitcoin yield, it does become exponentially more expensive to keep incrementing that over time, right? That's just math. So investors are starting to focus on that because they achieve scale so quickly. You don't have that same problem for a lot of these much smaller companies because they've not achieved the same scale yet where you run into that problem. But I don't actually view it as a problem long term because I think people get stuck in looking at one strategy and assuming that's the strategy in perpetuity. And I don't look at it the same way. I look at every company that I've ever dealt with that's building a roadmap is basically putting themselves on a continuous path of transformation. At least the good companies are. And that means that you're evolving, and each step in that evolution is building onto the next thing. So I actually, in my theory, I don't view what MicroStrategy is doing today as the biggest win that we're going to see for strategy. I think this is the building blocks of what's going to be the biggest win for strategy long term. And people are focusing on where Bitcoin is today, both in terms of its adoption and in terms of the products that are offered around Bitcoin and the way that Bitcoin's ingrained in the financial system today. And I think they're vastly overlooking the speed at which that's evolving. And if you look at the integrations coming with the banks now being able to custody Bitcoin, you've now got the US government out here talking about wanting to hold Bitcoin. That's opening the doors for people to view this not as a speculative bet anymore. And when I say that, I'm talking about entrepreneurs that want to build good products. This is now becoming a very safe asset to integrate into your product offerings. And so if I look out, I said 5 years is kind of what I look at right now. That's really kind of as far as I'm willing to look on the Bitcoin front at the moment because I'm looking at how fast it's changing and it's almost hard to comprehend the speed that that adoption is happening. And then I look at the next 5 years. And so I view right now the companies that are smart are using these treasury strategies to capitalize themselves for the future. I view it as the active pursuit of capital. And not everybody's going to have MicroStrategy's approach to this, right? They're going to look at ways for how can they utilize that Bitcoin later. I have no doubt that that's going to come over the next 10 years, which is why I don't concern myself with that conversation today. A lot of people do. And they say, well, they can't do anything with it. And I go, well, they could do stuff with it. They're just not right now. And there's a lot of people spending a lot of time building products and ingraining it into industries that are really appealing to that type of scale of capital. So, you guys have probably seen a lot of the stuff that Jeff Walton does, and he focuses on a very specific part of the insurance market that is absolutely ripe for an asset like Bitcoin to start being ingrained in some of those products. And so when you dig into what that means, it means that a lot of these traditional industries are going to be looking for this type of capital to bring into their business. And that doesn't necessarily need to be through Bitcoin directly. That's what a lot of people miss. There's a big distinction in what strategy does between holding Bitcoin and having a corporate balance sheet. People don't really understand that distinction all that well. They think, well, all they have is Bitcoin. Well, to a lot of players, that doesn't matter. What they have is they have an incredibly strong corporate balance sheet. And having a corporate balance sheet lets you bring different products to different pools of capital. And that's the power that they have. So if you're an insurance company, you can come in and you can buy the corporate bonds, but you can't go buy the Bitcoin itself. So they've got themselves in a unique place with the scale that they have. So all that to say that I view this as a phased evolution of a business. I think they're completely reinventing themselves. And I think a lot of these other Bitcoin treasury companies are starting to have that focus as well. It's not just about Bitcoin yield in perpetuity forever. It's about competitive advantage in your industry and becoming the best capitalized business in your industry that allows you to innovate at a pace that other people aren't going to be able to. It builds the ultimate in optionality into whatever your business is. That's what I view the long-term game being. So while I'm always very bullish on strategy, that should be no mistake. And, it's a big part of my portfolio and I love to trade it because it's become this very unique trading instrument out there. It's the most fun thing you can do. Up, down, sideways, doesn't matter. It's always interesting. They're also putting themselves in a position to reinvent themselves as a business. And to be honest, I think that's actually where the biggest win out of all of this is ultimately going to come from. It's going to shock the market when they finally do it.
Yeah, that's
cool. Anyway, that was a long-winded one, but yeah, I mean, this gentleman talked about GME as well, and one of the things that struck me the most is the part where he was saying about strong balance sheets, right? Of course, he thinks that MicroStrategy have a strong balance sheets. Now, I don't know why the net income was down by $1 billion, but he was talking about free cash flow. Let's take a look at that together here. It wasn't that bad, the way that I look at it. But I feel like, hold on. I think it's a balance sheet, right? Treasury stock. Am I blind? Am I blind? Okay. Shareholder equity, $18 billion. It's not too bad. Retained earnings, it's negative $0.2 billion. But I'm looking for cash flow. Maybe that's where it should be. Crazy. So last trailing 12 was in the positive free cash flow, but it's only $9 million though. And now it's negative $60 billion. So with this, we have a competitive, right? Of course, we're more competitive than MicroStrategy because we have positive cash flow. Don't get me wrong, GME does have some period where we have a negative cash flow as well, but we're fixing that as we speak. But our retained earning actually is a little bit in a better spot. It's only negative $81 million at this point in time. So we're working towards a positive retained earning. So why is that important? Well, it shows that we do have strong balance sheets, right? So with that gentleman explanation, it's not so much that, we're doing business and, we're selling Pokemon card. It's more about what the balance sheets can get us to. It's a stepping stone to get more finances, more people interested in investing in, putting a pool of capital from institution. Yes, we're waiting for the institution to reprice our company the right way. And without the strong balance sheets, we cannot do that. We cannot go and wave the wand. Of course, we do it by, offering shares to the public, which is a great thing because now you and I could participate in whatever GME is going to do, in whatever Ryan Cohen is going to turn the business into. And the other points that he was telling us is that great business evolved moving forward. They don't just stay stagnant. Okay. So just like how we weren't interested in or we weren't doing PSA at all before that. It was just the gaming industry, right? Dying brick and mortar and all that stuff. And so now we're transitioning into Pokemon card and with a better, profit margin prospect. So can we scale that to the future? Of course. Can we scale that now immediately? No, not immediately. But look at that. Immediately what's happening? People are freaking out for no apparent reason. And so this is not the time to expand. This is the time to accumulate. which we do have accumulation of cash. Now we're going to accumulate Bitcoin. Okay. Hopefully he's going to buy more Bitcoin as the Bitcoin goes cheaper in price, and will entice him to maybe raise another $1 billion. But hopefully he doesn't. Hopefully he'll just use that cash to buy into Bitcoin straight away. Not to say that we can't handle another zero interest convertible notes, but I think it's just too close to do that at the moment. Although, again, I wouldn't be mad if he were to do that, because I feel like the opportunity is now to accumulate Bitcoin under $100,000. I fear that next 4 years you won't be able to buy Bitcoin under $100,000 because with all of this, high demand with city states now, even China, is competing for Bitcoin. So it's gonna be crazy for sure. I mean, it's such intense time to be alive. World War III talks. I know, I saw that. I try to avoid that topic because it's kind of scary to me to even think about. Let's hope, God comes down and stop everything, Yeah, I pray that doesn't happen. Market and Bitcoin crashing and God cannot close it. I know. Well, let's hope the war's not there. World War III is not gonna happen. Yeah. I know Jimmy's gonna do well, but what good is it if the rest of the world is suffering? So I don't want that. All right, so let's anyway, so back to the free cash flow thing. Currently, MicroStrategy doesn't have that at the moment. So with the operational thing, but they do have positive cash flow from investing, financing, or whatever. So, all right, $22 billion from the Bitcoin acquisition. So, and then they have insurance. I wonder if they have goodwill. No, don't see it. Hold on. Yes, they still have $38 million cash. I saw that. Okay, total asset. That's pretty good. Other long term, I think this is what the amount of Bitcoin they have there in terms of dollars. So depends on the price of Bitcoin for the next quarter. That is going to be accounted for. And then I think this is market to market accounting. So when is their next earnings report, I wonder? Net cash. So they're in deficit right now, which is concerning, but not that, But I wonder what is their interest expense? Occurred expenses. I mean, as long as they're maintaining their monthly expenses. Okay, prepaid expenses. Receivable. No. Okay, look at the income real quick. $2 billion. Okay. That's trailing 12, right? No, annual. And look at the... Okay. So quarterly, let's see, operating expenses, $1 billion. So, yeah. I mean, if Bitcoin goes down, right, they could raise $1 billion for the quarter. to survive for 1 quarter. No big deal. People will give them money for free. Nah, they will have to pay. They will have to pay interest on it. I don't think anyone will just give them for free right now. But again, yes, it will be at the expense of either a common shareholder or some sort of advantage for the bondholders to get immediate. Just like how the U.S. do a short-term Treasury bond at 5%, right? Like 3 months Treasury bill, bill, U.S. bill, T-bill, U.S. bill. Doing the T-bill, right? T-bill is like a short-term lending because the government needs money right away. And so they entice people to give them so that they could just get a 5% APY for the 3 months. So they get a lot higher interest. And so MicroStrategy could technically do that as well to get people be willing to, to lend them money out real quick just to get rid of the expenses right there. Yeah, it's not in a dire strait, you guys. Like, even if Bitcoin were to fall down, they only need $1 billion this quarter to survive.
Kind of the white swan, right? Like it's predictable that they're going to have that optionality in the future. We just don't know to what ends they're going to use it for.
It's going to be when everyone doubts them the most. Right? That's usually how these things happen, is as soon as people are throwing in the towel, they're over it, one trick pony, something happens and it reignites the market again and people go, oh my gosh. And then you look and you go, it was so obvious, right? I should have seen this coming. I think you're going to have a lot of stories like that they're going to catch people off guard.
Very well said. I'll say something that I've said several times on this podcast and on external podcasts, in that the biggest risk to MicroStrategy, now Strategy, I'm going to get better at that. It's almost like Twitter and X. I'm just now getting used to that. But
I tell people I need several years before I'm going to work it out of my vocabulary. They're MicroStrategy to me. I'll come around eventually, but it's going to be tough.
It's almost like a signal, actually. If you say MicroStrategy, it's like, yeah, I've been in the trade long enough, So
that's right. That's how we'll be able to differentiate. Yeah,
exactly. It's a badge of honor.
I guess that makes us OGs. But to continue with the question, essentially the biggest risk in my eyes is the custody piece of it. So how do you weigh the risk of catastrophic loss if their custody was ever compromised? Because I think it's something that just isn't talked about nearly enough.
Yeah, custody is always an interesting piece. And there's a lot of people that are upset by MicroStrategy not having the same level of transparency that some of these other companies have around exactly where the Bitcoin is, right? There's a lot of conspiracy theories that are out there about them not having the Bitcoin and all that stuff. But the reality is, as a public company, they've got some unique situations as a fiduciary in terms of how they need to manage the Bitcoin today. So it's no surprise to me that they didn't go down the path immediately of trying to self-custody the Bitcoin and go through all that yet. I think that them going to some of these institutions at the scale that they're operating at, which is important, right? This isn't a company that owns 100 Bitcoin. This is a company that owns almost 500,000 Bitcoin. So there's a diversification of risk that a company like MicroStrategy has to take for their shareholders, right? Because they're responsible to their shareholders. And early on, I don't think there were enough offerings for custody for a customer like MicroStrategy. The space has really been evolving, and you've seen a lot of it happening out of the Bitcoin community now, where a lot of these companies are starting to work on that multi-institutional custody or multi-signature custody that's becoming much easier and frictionless for customers. And I think that's amazing. And that's probably going to onboard the next tranche of Bitcoin treasury companies. MicroStrategy is at such a scale that I think that right now they would view it as they almost have to be in these mega institutions, right? A Fidelity signals to the market at their scale right now stability, right? People trust that name at the moment. And I think that's really, really important when you're buying Bitcoin at the scale that they are, that the market wants to see you partnering with a trusted company that's been around for a long time, even if they're not necessarily the pioneers in Bitcoin, right? We all know that that's not the case. And there's a lot of companies that are coming out right now that have what I think is probably at least a matching offer, if not a very superior offer, to some of these legacy financial institutions because they were built natively around Bitcoin. So I look at the next wave of companies and I say those companies are going to really be focusing on the different types of custodians that they can use. And when you get into these small and medium-sized businesses, I think that they're going to want more of a personal touch than what you're going to be able to get out of a Fidelity or a Coinbase Prime. Right. I think that they're going to want those companies that they know that they can call, that can handle them through the process. I think that's a very important part of that adoption curve, because early on as Bitcoiners, I don't think we necessarily made it easy for this type of adoption, right? We focused more on the cypherpunk type of marketing versus trying to meet the buyers where they're at. And that's changing now because now all these products are getting that more frictionless user experience where you can get yourself into a self-custody type arrangement or a multi-sig arrangement with another institution or a multi-institutional custody arrangement. Those offerings are now coming out so people can actually start building along their journey with those ingrained into their plan. And I think that's a huge evolution in this market. It's not just that you have to go rely on a Coinbase Prime to custody for you or a Fidelity or one of these mega institutions. You're now going to be able to find the right fit, right? The companies that offer the right fit for where your business is at. And that transformation, I think, is going to be very big for the onboarding of the people that are going down this journey next.
Embrace the future of corporate finance with Acropolis, your strategic partner for a Bitcoin treasury strategy. We're the experts you work with to create and maintain strategies. How are you actually holding the Bitcoin? Because if you lose the Bitcoin, it doesn't matter how many Nakamotos you have, or it has no regard. So I think that poses a hypothetical, and knock on wood, not wishing for this to happen whatsoever. But let's say they did lose the Bitcoin. How would we even know? Because they've promised to never sell the Bitcoin. They don't do proof of reserves. So couldn't the business just keep moving forward without any of us really knowing and seeing the same benefit to the network overall?
Not necessarily, no, because in that situation, we're talking fraud, right? That's
Right.
part of the issue. So if they were to lose the Bitcoin and then they don't report that out to the market, now you're in a fraud situation. So I don't think that that's necessarily going to happen. Now, obviously, it would be devastating, right? You don't lose 500,000 Bitcoin and move on with your business, business as usual without a lot of issue there. So that would be a catastrophic failure from a strategy perspective, which is why risk management and putting in the right frameworks around risk management and risk mitigation is a massive part of corporate governance for these types of companies. And I actually think it's the first step they have to take. You can't just, as a company, just dive into buying Bitcoin. You shouldn't, at least. You should really build out the framework. There's always the rush to market by a lot of companies. There's the excitement, and you just want to buy. But if you haven't defined how you're going to manage all the risks along the way, including custody risks, right? You might be splitting it up amongst several different companies in order to spread that risk. You might be bringing on insurance products to cover some of the Bitcoin in case there is a loss. I mean, there's a lot of things you have to think of before you even get to the market and start buying Bitcoin. And I think it's really important for them to take that step to make sure that before they embark on this journey, they have a comprehensive plan, one, for every different market condition that they might run into, and two, for how they're going to manage all this on the back end, right? How do you really ensure that you have a really robust custody solution for all your Bitcoin that can bring confidence both to your stakeholders, if you're a private company, to your public shareholders, if you're a public company, building that out, defining it, and letting everyone know how you're going to execute on this to make sure you're mitigating any of those major catastrophic losses is really phase one of this journey. And it's one that I push on pretty hard because people try to fast forward a lot because there's excitement and they just want to get to market. And you have to slow down and really think through the impact of this on your business because you're deploying serious capital into this type of a strategy. And it can't just be focused on the buying activity. That's just one point in time activity. It's all the management layer on the back end, all the governance that comes along with implementing this type of a strategy and making sure you have that laid out so that it's almost automatic. People know how to execute. They know how you're delegating all those risks. You're bringing in the right types of solutions to make sure that behind the scenes, everything is secure and safe and auditable for you. I mean, those are very important pieces of the puzzle before you ever get to the market to buy Bitcoin.
Yeah, so
That's a very important point too. Like, I wonder why Ryan hasn't done it for so long, right? So yeah, I mean, it's a tedious process for sure. As a personal, person that hold Bitcoin before, it's not tedious. So it's so much so then it's just the idea of carrying, a piece of paper of your seed phrase, right, on your nightstand and all that stuff, and to make sure that it's never gonna go lost in some place. That's one thing, but if you're a corporation, you have to think through all that as well. And so again, when you're not rushing into something and coming at it where, to implement this type of strategy, I'm betting that, Ryan Cohen's not going to do anything where, rushing and all that stuff. So he's taking his time to do it. And that's respectable for a CEO to do. And again, perhaps, he has to talk to so many people and to make sure that the board would be on board with it as well, which they already give a go, the confirmation. during the earnings report and all that stuff. So with that, they implemented the step right away. So just go to shows that they've been discussing it probably for a long time before they implementing it, right? So yeah, it's a perfect time to live. It's an exciting time to live for sure. All right, so yeah, just be on the lookout for the downturn. I'm sure it's going to be an interesting day tomorrow. But I wanted to listen to this one. But just leave that discussion there. I saw this freedom thing. I just saw right here. So this is an 18 minutes one. I'm kind of curious. Sorry, you guys, I'm just hanging out here.
Join me and welcome Fon Lee.
Hello, everyone. So I'm really excited to be here for a couple reasons. One, and my kids said to say this, I spent quite a bit of time at MIT. This is my 20th reunion year. So I graduated from here, grad school in 2005. And I always loved being in Boston. My oldest born, Owen over there, oldest son, was born in Boston. My middle child, Maya, and they're killing me for pointing them out, goes to school in Northeastern, and my youngest will maybe go to Boston at some point in time. So I just love being at Boston, love being at MIT. The second reason I'm excited is, and those who know strategy, I love Bitcoin. Hopefully you all do too. I have Bitcoin. I have literally 3 Bitcoins. And wait a minute, there's like 40 Bitcoins on my socks. And I'm not going to show you my underwear, but it might have some Bitcoin on it too. So I think I have more Bitcoin on me, physically, I know that's sort of a weird idea with Bitcoin, than anybody else in this room. And strategy, I guarantee, has more Bitcoin at 528,000 than anybody else in this room, maybe even combined. So I love Bitcoin. So that's the reason I'm here. So we're going to talk about Bitcoin for corporations. I know you just heard a conversation around why corporations shouldn't have Bitcoin, all these kinds of things. But I'm going to tell you why I think it's quite important for Bitcoin and for companies to have Bitcoin. And I think I might be uniquely qualified to share with you my views on this. First of all, corporations. Some of you are sitting here. How many folks in here are students? Raise your hand. All right, like 20, 30%. How many work for a corporation or run a corporation? Okay, it's probably the other 80%. I have a few statistics up here just for you. There are, and this is just US, the numbers in the world are hard to find. There's about 35 million corporations in the US. And we as corporations employ about half of all the workforce in the US. We have about 28 trillion in revenue, which is roughly the GDP. That's how the GDP of the US is created, is through corporations, and about 4 trillion in cash. Right? And then you talk about, okay, what about a publicly traded company like Strategy? What do we have? Right? There's about 5,000 publicly traded companies in the US, employing about 40 million people, 16% of the workforce overall, 22 trillion, so you can see quite a bit of the overall GDP comes from public companies. And then let's narrow it down a little further, the S&P 500, right? 500 of generally speaking, the largest companies in the US, of which Strategy is not included on it, even though we're about 120th largest company in the US. About 29 million people. Again, a very large portion of the workforce is employed by the S&P 500. 12% of the people, 18 trillion of the revenues. So more than half of the revenues, right? Half of the GDP of the country comes from the S&P 500. So for those who are like, hey, corporations aren't important when it comes to Bitcoin. Corporations are absolutely important when it comes to Bitcoin. Right? The country is run by companies. The country is employed by companies. Corporations are fundamental to the success of Bitcoin. But there's something fundamentally wrong with companies in the US. Right? 35 million companies, 5,000 publicly traded. None of them really perform. If you think the bar, right, you can all go out there and invest in the S&P 500. If you think of the bar of performance is the S&P 500, and that's what most people said is, okay, is your investment working? Or is your investment not working? People think of the S&P 500 as 11%. The Russell 1000, the next 1,000 largest companies in the US, don't perform as well as the first 500. The Russell 2000, the next 2,000 biggest, perform half as well as the S&P 500. And the rest of the companies that employ everybody else basically runs with GDP, 2.5% growth. So anyone's like, oh, companies are doing well, companies are doing great. Well, you hear, well, the Magnificent Seven is doing well. The S&P 500 sets the bar. almost every other company is not performing. So what did I learn while I was at MIT? Right? What did I learn? I went there for business school with the idea of learning, and they teach how do companies do better, how do corporations do better. We can figure this out. I'll save you $200,000, and I'll tell you what they taught us. All right? I'll save you 2.5 Bitcoin. Right? What did we learn? Option one, you can start, or you can run a company. In about 2 years, this is what I learned how to start or run a company. Hire smart people, build a great product, acquire customers, retain customers, increase market share, expand margins, maximize earnings per share, reinvest in business, reduce your costs, pay dividends, buy back stock, and then when you're done and you've given up, acquire somebody to grow some more. And then start from the beginning. By the way, that's extremely hard to do, which is why 99% of the companies in America underperform the Magnificent Seven in the S&P 500. This is hard. 2 years of business school, most people don't figure this out. Okay, well that's hard. Everyone's like, well, how do I create a great product? How do I become the next Amazon or the next NVIDIA or the next Google? And after 1.5 years of all this, you're like, this is really hard. Let's try something easier. Let's just manage money. Let's just manage somebody's funds instead. I can work for private equity. I can work for venture capital, maybe a hedge fund, maybe endowment, maybe a pension fund. That's easier, right? And then after you realize that they only hire 10 people a year, you're like, oh, that's really hard too. I can't get a job doing one of those things. So what am I going to do? I'm going to do what 40% of the people who go to business school do. I make money off of the people in columns A and B. And I become a consultant, which I did for 10 years. I can become a banker. You can go work for one of these large banks. That's admirable. And you're just basically selling to these guys. But they teach you all the same principles. This is my MIT transcript. It's a little risky to put it up here. You don't have to put your glasses on. I got like a 3.7 or something like that, mostly A's, some B's. But that's not the point. What did I learn in those classes? 90% of those classes that I took in finance were all about how do you do column A or column B or column C. They taught us all the exact same thing. How do you make more money by selling product? Admirable. That's the American way. And so what ended up happening at the end, when you graduate with a great degree from a great school, you underperform. You can go work in private equity, and they actually found a way to outperform the S&P 500 for the last 10 years, 14%.
Yeah, and we know why they could outperform that much. Because they rigged the game against people. The game is rigged, right? That's the only way that they could get ahead of people, right? And so, but of course, they have to show with number. Obviously, that's the only metric that they use. And I would argue that this shouldn't be here if the game is not rigged against that. Now, one important point there, I'll play the whole thing, don't worry, that he was pointing out is that, when you go into business school, those are the things that are, funneling your skills and your passion or whatever kind of bundled up. But even after all that, you still underperform. That's what he's saying here.
That's pretty good. Venture capital, you hear about these guys out in Silicon Valley. They're brilliant. They work really hard. You pay them 2% of your 2% of your assets and 20% of the gains for them to perform as if all you did was just put your money in the S&P 500. If you went and worked for a bank, your performance was 9%. People are like, 9% is pretty good. Not when compared to 11% as the S&P 500. You could go work for a services company, right? You can go work for McKinsey or Accenture or Deloitte or BCG or Bain. You'll do 9%. You go work for a hedge fund. These are the quant PhD guys. They're real smart. You do 9% there too, right? Or you can work at an endowment, right? Harvard has a big endowment. Penn has a big endowment. MIT has a big endowment. And they're doing 7%. Brilliant folks investing. Pension funds, where you put all your retirement money, 6%. So after all of that education, all that smarts, you get the smartest people in the country, and all they can do is the S&P 500. So what's the problem? The problem, from my point of view, and the problem from a lot of Bitcoiners' point of view, is focusing on the income statement, group ideology. We've taught every single person the same thing at every single school across the United States of America, good schools, average schools, below average schools, and inertia. If you're going to be taught the same thing, why don't you just do the same thing as everybody else? And of course, the solution to all of this, the solution for corporations, isn't to do the same thing as everybody else. The solution isn't inertia and not do anything new. is focus on your balance sheet, show a little bit of bravery, and invest in Bitcoin.
All of the components that we have in Ryan Cohen. I'm telling you, we've got the best one, you guys. Okay, chill. Okay? Now, hold on, let me see. What is Bitcoin right now? Okay, at least it's bouncing back a little bit. I was freaking out myself. It's like, oh, goodness. I'm telling you, you know, this type of things, all I'm seeing is good things for GME. And I don't understand why people don't get it. It's the foundation, right? The contrary nature of people. That you don't have to do the same thing and expecting the different result. You don't have to follow the herd. You know, sometimes you just have to venture out a little bit just to find a different solution, because everybody else are just drowning in their own stupidity, right? Or they think it's their, you know, PhD, their whatever, because they are, you know, in that group think, that ideology that they think that's going to bring them success. But if those success is at the demise of other people, 99% of people around you, it's not really a successful thing, right? And so, again, that's why I feel like Ryan Cohen or MicroStrategy really understand that vacuum of you know, new ideas that could solve, you know, real world problem here. Not saying Bitcoin is the only solution, but at the very least, it's new. An improved idea upon capital preservation. That's it. And the only reason why it's that way is because, again, inflation, right? The Federal Reserve has always been placing the inflation at 2% every year. And we don't typically understand that until it's too late for us already, right? People would go to work tens of decades before they realize, oh shit, why am I not doing well in life, right? And oftentimes they don't look around and say, oh, it's a Federal Reserve, right? No, because either they blame it on themselves, you know, it's like, oh, well, maybe I'm not smart enough and all that stuff. When all the while it's right in front of their face. It's because your money has been eroded in value based on the money policy that was placed. But because you trust these Yale, you know, graduate, Princeton graduate that, you know, in the Jerome Powell spot where they get to be the chairman of Federal Reserve and making these type of decision that affects your life, but then they get to sit up there and say, well, you know, the economy is doing well. We're not going to lower the rate right now because we feel like you guys are doing well, right? And so when you get to sit up there and get people elevated you to the point where, well, this is such a tough job and all that stuff, right? Of course, it's all manufactured. And so when you understand that from that level, Bitcoin becomes so much easier, you know, investment. And the reason why these smart people don't realize that is because they've been indoctrinated to be so different, you know, in a different way. So that's what I get. The point of this live stream is to understand that from that level. I know with the technical solution for Bitcoin, that's for you to figure out for yourself. But this is more like a big idea.
And so what does that look like? You know, you've probably heard this before. Smart people create wealth by making money off of their money. Your parents might have told you that, right? You might have heard Warren Buffett say that at some point in time. So what does that mean? If you're an individual, you can try to figure out how to make $100,000 a year working at whatever job it is, or $200,000 a year working at an investment bank, maybe $300,000, $400,000. But sometime you want to make your money off of money. 5%, 11% of you invest in the S&P. Everybody knows that. Universities. Guess where universities are not making their money? Tuition. You would think, wow, tuition is rising 20% a year. An undergraduate student at a university is a break-even proposition for the most part. Universities are making money off of their money. Alumni give them money. They create an endowment. and they get their 6-7% off of that. Imagine if they got more than that. Nations, right? We talked a little bit about a Bitcoin strategic reserve, right? We talked about a strategic, a sovereign wealth fund. How are countries making money? Well, they can make money from taxes, but the really wealthy countries, right? United Arab Emirates, right? Saudi Arabia, they're making monies off of their sovereign wealth funds, off of the investments in the money that they have in their businesses. And so why, if you're a company, wouldn't you do the same thing? If you're a company, you can make money selling things, very admirable, by the way. Everybody buys things, and so I'm not saying that's not a good way, but there's a better way if you're a business. Just like if you're an individual university or nation, make money off of your balance sheet. Makes sense. So why don't they do it? Why aren't companies doing more by investing their balance sheets? Why is 10% of our education at the top schools in the world focused on the income statement and not the balance sheet? Because until Bitcoin, there really wasn't a way, right? What's simplest for a company to do with their balance sheet, with their savings? What's simplest for a lot of you to do? Invest in commodities, right? Invest in a US Treasury bill, right? And for most corporations, it's actually not legal, like from an SEC perspective, right, to invest in anything other than commodities and US Treasuries. Well, the legal path, the simple path, has been to invest in gold, 10%. That's actually pretty good for the last 10 years. That is not the track record of success of gold for the last 100 years, right? Invest in silver, corn, right? And the worst thing you could actually do is what most companies do with their excess balance sheet, which is T-bills. They don't invest in oil. It's negative 6%. This has been the path for most companies, and this is why they don't look at their balance sheet as a strategic asset, even though all people should, right? Universities do, countries do, is they're not getting the return that they would expect out of that. And so what occurred in 2008 and was started by Strategy in 2020 was a way out. Bitcoin's challenging every thought that everyone has ever had in a corporation. And if you look at this, every 10-year period since the inception of Bitcoin, its performance has far exceeded. You can't even see the green line on this, 11%. The worst 10-year period Bitcoin ever had was from 2013 to 23. That was a 50% gain. The best, 223%. This is why you're all sitting here. Obviously, you're interested in the technology, but this is the return. This is the way out. Bitcoin just doesn't give you a way out financially. It gives you a way out of the ideology. It gives you a new independent ideology. Today, corporations run in markets that operate 252 days a year, 6.5 hours a day, 19% of the time. Bitcoin operates 100% of the time. Corporations report earnings quarterly. Strategy shows our results daily. In fact, we update them every 15 seconds on our website. Credit ratings update annually. Credit ratings ignore Bitcoin. Accounting policies update every 5 years, quinquennially. I like that word, quinquennially. Accounting policies don't work for Bitcoin. So things get a little hard. We have to change things, right? For this to work, and it is starting to work, it requires a new Bitcoin standard. You have to go from traditional capital to digital capital, from US Treasuries on your balance sheet to digital balance sheets, all the way down. We're creating a new accounting standard, right? A new credit standard, a new way of viewing public companies in the world. And so when you do this, what happens? We were, and we are, the best performing company in the United States, Strategy, in the last 5-year period, because we found a new way. We stepped out of the groupthink and ideology that they teach at the greatest universities in the United States and all the companies and all the banks and all the consulting groups. We did something different. And not only did we outperform the entire NASDAQ, the entire NASDAQ, the entire S&P 500, the entire Mag 7, but it wasn't even close. And we outperformed Bitcoin. And what happened? Strategy became the most performant, the most volatile, the highest volume, and most interesting stock in the United States as a result of our Bitcoin strategy. Then you're saying, well, you guys did it. Can everyone else do it? You're going to hear from 2 of these companies later. Metaplanet did it last year, starting in April. They outperformed us. They were the highest performing stock in the world by adopting a Bitcoin strategy. Similar Scientific did it. They outperformed Bitcoin. They outperformed the S&P 500. And one of the newer ones, Cooler, did it. This is a replicable strategy. So who else should be doing this? Everyone else should be doing this, don't you think? Takes.
Ooh, you know who's next gonna be the most outperform of all? Right there, sweet spot. Yeah, hey, we're go big or go home type thing, okay? We're gonna beat Strategy, okay? We are telling you. Ryan's gonna beat micro strategy for sure. Hey Amber, what's up? All right, Carter's done with his stuff. Now you have to do my brakes next. I do need some what is it called? ABS, anti-braking system. I feel like something's wrong with it, so I'm coming to you. Okay, so and then Anthony's here. Anyway, so yeah, other companies gonna do it, but we are in a position to beat strategy with it. If we're, very serious about this moment in time, and I'm sure we're gonna buy it at the right time as well. If we continue to issue it and then buying it.
Courage, it takes original thinking, it takes independent thinking, it takes bravery, it takes Bitcoin. Low growth, high cash companies should do it. GameStop just did it. Their stocks outperformed everybody yesterday, right? What about these companies? What about high growth, high cash companies, right? They could do it next. And if you see this happen, then you realize there is a way out. There's a way to do something different. There's a way to escape what everyone else is doing in the United States. But we're doing what everyone has told you, what your grandfather told you to do. Make money off of your money, right? I'm sure someone's had somebody in their life mentor them and say their way to true wealth is making money off of your money. So what do I leave you with? You've heard some of these things. As an individual, as a person, what should you do? Learn Bitcoin, spend 1,000 hours if you can, but start with 100. Build your balance sheet with Bitcoin, and break free. When someone tells you something in school, in work, in life, question it. Question the status quo, question the ideology. If you're a corporation, educate folks in your team, your executive team, your board, build your balance sheet with Bitcoin, and break free from the traditional models, traditional products, traditional people. And so I thought it was apt that this conference is about freedom. I think what Bitcoin does is it allows corporations to find freedom from the average. And corporations matter for America, and corporations matter for you. So thank you for your time, and I'll take some questions.
Ooh, that was nice. But yeah, I'm sure you see a lot of GameStops happening right now in your mind. Just, is $1,000 a share even a question anymore, type thing? Man, they call it manifestation. You just speak as if it's true type thing, and then it's just coming true. So do that for us, okay? But again, it's gonna take some time. Of course, tomorrow, max fear of people just going crazy because of tariffs, even though we just saw the announcements of every country backing out from tariffs. So again, any type of excuse to deleverage, right? So just be prepared for that. And just rest assured, if you're in a position already, okay, you're fine. Don't freak out, okay? And Ryan, if you're listening to me, I'm telling you, if you already bought it already, don't freak out. You know this. Buy more, huh? I know you've added some shares of GameStop, but use that balance sheet, a little bit more cash. Telling you, $3 billion worth of Bitcoin at this price. Oh, you're gonna be my hero forevermore until the end of time. You already are, but I mean, eternity is good too. So I know. But there you go. I'm telling you, okay, so this is probably the trend line it's going to be. But remember, there's another trend line here too. So here we go. We already hit that. If it's coming down, of course, this is another trend line. Excuse me. So there might be a double bottom over here, maybe a steeper one. That's also another option. There we go. Yeah. Again, fear is gonna fear people out of the thing. Okay, let's get back to this gentleman here.
Turning gears a little bit here, when we were when we reached out to you to get you onto the pod, STRF didn't even exist yet. So, we were thinking, okay, we'll have him on to talk about this new product offering, STRK. But now we really are going to have to dive into the difference between.
What is that, 90,000? $90,000 a share or $90 a share? That's cool. Is that in Danish currency? Okay, 90K. 90K just for clarification. But is that in a local currency though, or in dollar terms? That'd be crazy though. Like, no, $1,000 per share. It's not even a question anymore. I question the time frame though. It will go to that point, but we'll see. We'll see. It could take us 30 years to get there. You never know.
Between this preferred stock offering of STRK and the new fixed income offering of STRF, so Strike and Strife. So the way I, take as much time as you need, because obviously there's a lot to suss out here, but how are these two vehicles different from the investor's perspective? And then how are they different from MSTR's perspective when it comes to their, accretive dilution strategy?
So it's been really interesting watching them build into this market for a while now. And STRK, I think when that came out, anytime you put the word perpetual on anything, it blows people's mind, right? Yeah, we saw that exactly happen with Strike. And really the main difference between the two is going to be the convertibility feature of STRK. And that brings in a different type of investor than a true fixed income product does. So STRK is going to bring in people that look for total return, right? And total return is yield plus capital appreciation. So that's a different type of buyer than you have for Strife, which we got to acknowledge is a great name for a product. I mean, it's very good. Perpetual Strife, it's great. But that brings in those true yield-focused investors that want long-term stability. They don't want it to be sensitive to the common stock equity. So the people that are buying Strike really do want that floor protection, right? You're higher in the capital stack. So in the event of a bankruptcy, you're higher up the stack than all the common stockholders. So in that stack, it goes convertible bonds are the first ones in preference. Then it's Strife, STRF is the next layer. STRK is behind that. And then it's the common stock, right? So the risk is in the common stock ultimately. And then these preferreds, they've got some protections there. So these really appeal to institutions. One, if you're on Strike, you want some of the upside potential of Bitcoin through the common stock, but you also want a yield generating asset, right? So they're looking for that blend. You've got downside protection. You've got a return you can count on with that 8% dividend. It's $8 a share because, the yield can float, but it's $8 a share annually. So that gives them some potential for outsized return versus a standard fixed income product that is only offering a yield. There's no convertibility feature on STRF. So that is really what segments those two products. But it goes to a different type of a buyer. Not all buyers are going to buy a fixed income product with a convertibility feature. Some of them can only buy products that just generate a stable yield that they can depend on. And so STRF is going to be very interesting to see what the offering ends up at, because I think with STRK, people were a little surprised initially, because I think the first messaging was that they were looking at $2 billion worth of that preferred offering, and then they downsized it to 250 and ended up at 584. Right, so that caught the market off guard. This one, they're starting at a pretty standard 500 million. And seeing how that is purchased by the customers, because they are making it a more institutional type of an offering, although retail can still participate through Fidelity in the IPO, but you have to have certain limitations on your account and certain amount of capital in the accounts to be able to participate. But they're really focusing on those institutional buyers, those pension buyers, whereas the convertible one is going to bring in a lot more of like the hedge fund crowd. So they're targeting different types of buyers and different pools of capital. I think that for people that have been focusing on the massive offerings, they're overlooking these a little bit because they want MicroStrategy. And we've been conditioned to see MicroStrategy come to the market now with billion-dollar plus offerings, right? $3 billion convertible offerings.
And oversubscribed every time.
Oversubscribed, yep, all of that. And so that's what the market became accustomed to seeing. With these, they're kind of setting them up. Right? This is just getting them established because these are much more difficult to get to market with because they're not just private offerings. All the convertible bonds are private placements. So they're going out finding buyers, but you don't have to go through the whole listing process like you have to with these. So on these, you're seeing them establish these two products. And then instead of continually having to do new offerings, you get what you saw with STRK, where they open up an ATM that they can actually issue the equity for these new offerings through an ATM vehicle. And so they can do that whenever the market conditions are right for it. But what it does is it shifts all of that inorganic selling pressure off of the common stock and into the preferreds. And it's a unique vehicle because you can essentially think of it as a self-correcting vehicle, right? So if they go and they use the ATM on STRK and it pushes down the price of STRK because you've got more selling pressure in the market, the yield goes up. And as the yield goes up, you attract more buyers, right? And the market's going to always revert that back to fair value. So it's different than using an ATM on a common stock because it has that feature, right? That dividend is really a huge benefit to these preferred offerings for them. So they can alleviate all that pressure on the common stock, and that common stock is what drives that extra return on the STRK offering, right? Because it's got that convertible option, so it has that call option type feature. But then you've got the really stable offering in STRF. And that's one, anytime you can get a 10% fixed dividend, that's a huge return for a lot of people. I mean, I've told people before that when they put out STRK, it essentially became the cash account of my brokerages. If I'm settled out of any type of trade, it's just going to sit in STRK. Maybe it'll sit in STRF. I don't know yet. I've got to think about that now. But it became this new type of offering that I have a way to deploy as a retail investor, right? I'm not going to sit in a 0% cash account in a brokerage anymore if I can sit in something that's quite stable and get 8 or 10%. So it has a unique value proposition out there in the market that's going to keep the demand high for it. Now, the question always becomes, well, now they're building these liabilities that they have to pay, right? And that's a worthwhile conversation because that's real. You know, the business historically, and I take 2024 with a little bit of a grain of salt just because there was a lot of restructuring in the organization. So you had a lot of one-time costs within MicroStrategy as they were right-sizing the workforce, which is a really big effort. They were doing all the rebranding. There was a lot of one-times in 2024. But if you look back to the year before that, they've traditionally had 60 to $70 million of free cash flow. So you're benchmarking that against what they have to pay out on these perpetual preferred offerings. And people are going to initially look at that and think, well, right now they can float what they've got out there, right? STRK doesn't have a huge liability with it at the moment. Now they add STRF, that's going to be 50 million on its own. So now you're probably over your organic cash flow. How do you pay that? And the answer that is inconvenient, but it's the reality is if they need extra, either it's going to come from another capital raise or the ATM through the common stock. But that's much smaller. So right now for scale, for what they owe, including STRF, we'll see what that ultimately ends up being at, but I think 10% is probably a pretty good pricing. When you look at that liability and you think about ATM usage, what we saw from ATM usage in Q4 was massive. With this, we're essentially talking about them turning on the ATM for 5 minutes, maybe, to fund these liabilities right now. This is the most liquid stock that's out there. And so while it's a good metric to look at, the equity has really become the product for strategy. And that leverage ratio keeps them overly volatile relative to Bitcoin, which makes it a massive trading advantage. It's a super liquid stock because it moves and investors can generate returns. So while we're out digging into all the details right now and looking at every component of the strategy, most investors are not doing that, right? How many stocks do you own where you've gone down to the level that you've probably gone on with strategy, right? What you're looking at is which stock is moving, right? You've got a lot of momentum investors, you've got a lot of volatility investors, and that keeps demand over there. So using the ATM at a much smaller scale is still going to be massively accretive. And when you look at the Bitcoin yield that's generated out of there, the math equation you're really doing is you're looking at that initial yield that they generate, which is far more accretive than even the convertible bonds we've seen, 0%, 55% premium, I think was the highest one that they got. So when you look at the yield from that, and then you realize that the perpetual preferred is significantly higher than that, what you're really doing is you're looking at that balance between what point in time will they have issued more equity through the common stock to fund the dividend payments out of these new offerings versus where that initial yield started, that break-even point on what they could have achieved through a convertible bond or any of the other offerings. That's what people are going to start focusing on now. And that's going to be a function of how the common stock performs, obviously, because if the share price is significantly higher, it's going to take far fewer shares for them to fund those liabilities. So that pushes that break-even point, 50, 60, 70 years out sometimes, depending on how you're modeling it. And sometimes it's perpetuity. There's never a cross. So it's a very interesting breakdown that they've created because they've created a product for every market condition. If market conditions are terrible for the common stock and Bitcoin's in the tank, you're not going to get the same economics on a convertible bond if the volatility crushes or on using the ATM on the common stock as you're going to get on a 10% fixed income product. You've always got that pool of capital available to you. Same thing with STRK, far less sensitive to the pricing in the markets. And that one's probably actually going to respond a lot more to changes in US interest rates. Right? People forget that connection where that yield becomes more valuable depending on what rates are doing in the US. So there's a lot more dynamics to watch now when you look at each of these products, but what they're doing is they're creating an ability to operate no matter what the conditions are. And I think that's an immensely powerful setup that they have now.
So I think you can.
I think that's the most important point of this is that a lot of trading activity comes from the fact that people are not investing, come from the traders, and this is what we're trying to prepare. Well, at least I'm trying to prepare for GameStop, right? What it's going to happen, and the volatility traders and people who are going to be in the stock for whatever different reason that there is. But the whole point is that it's going to be popular again, and popular for the right reason, for sure, but also too, it's going to be excited, right? For people who've been waiting for the price action. Oh, is that not going to do anything? And then, that's inevitably going to bring a lot of haters as well. Again, it's the most hated stock in the entire world. It's GME, right? Even at this price point, I'm telling you, and those haters are going to be, enticed to short the company for whatever reason. They don't think that the strategy is working at all, even though, you're adding the most pristine class of asset. But it's mature into that for sure, right? I'm telling you, there's a lot of kind of idea out there where they're being pushed out. I don't know if it's true or not, though, that Bitcoin is not this, it's not that, right? Don't believe in the Bitcoin hype. It's just hype. Perhaps it's not, right? Just study it, and then you understand why. A lot of people should kind of take a look at that. It's more like a generational thing too. Okay, so younger people like millennial, if you're a little bit older, you probably kind of understand, or a little bit younger than a millennial, you would understand Bitcoin a little bit better than the next generation. So if you receive any type of inheritance from again, passing on to the generation after, what do you think they're going to put their money in? Do you think they're going to put money in the treasury bond, just like the traditional market? Or they're going to look into something like MicroStrategy, where they have so many, yield product out there that is being designed to capture some of those capital transition or transfer of wealth, into the next generation here. So my point is that, we're positioned to capture some of that growth in differ transition of investment style. And so GME is one of them, right? Because it's fun, it's memes, it's whatever, right? And again, different class of investor really ignite the excitement of investing again. Or trading, whatever. If you want to trade this stock, you're welcome. Come in. If you hate the stock, go ahead, short it. I don't mind. Go ahead. That's going to create an artificially low price for me to get in at a lower rate as long as possible. How is that a bad thing? Come on, you guys. I get to buy the best company at the lowest price possible. Crazy, right? I mean, is that a terrible novel? Oh no, 90. Okay, 90K. Oh wow, 40%. That's crazy. Yeah, free healthcare, free education, great. I know. Sure. I heard that. Is that Denmark? You're from Denmark, right? It's the happiest country in the world. Is that true? Do you feel happy over there? You feel trapped in any way? Blink twice if you do. Hey, because I can. What's up?
You can count on one or maybe two hands the amount of entities, if you will, that own more than 100,000 Bitcoin. MicroStrategy's got 500,000. The United States reportedly has somewhere around 200,000. So a little bit of a topic change, but curious, what's your favorite budget neutral way for the US government to acquire more Bitcoin?
So I think that the easiest way, right, the frictionless way, is just rebalance the reserve assets that you have. I mean, what was hilarious when they put that out was everyone digging into the different types of reserves that the US has. And we have like what was it, almost $3 billion in cheese reserves or something. Like, I mean,
Gotta have it.
there's some
Gotta have it.
wild stuff out there. But if you look at even just the gold, right? If you've got an administration that truly believes in Bitcoin becoming digital capital here for the future, you would look at your analog reserves, right? Your gold reserves, and go, if we have $740 billion, I don't know if that's the exact number, don't quote me, but it's somewhere around there, $740 billion, would it not be worth it from a strategic perspective for the country to take $10 billion of that and convert it into digital gold, which they put out in their own press release? It was one of my favorite parts about the executive order, was that you could go to the White House website and they were doing the education to the market about Bitcoin as digital gold. It was great. And people are underestimating what that says to every other country that's out there. I mean, it's one of the areas I've been harping on for quite a while now. When you look at assets and trying to determine what should be strategic to a nation, you really do have to look at how could all of the other nations utilize this in a way that's damaging to you. And they would look at it differently, right? They would look at it as, how do we use it in case the US gets grumpy with us, right? I mean, we saw that with Russia when they cut Russia off from the SWIFT network. That was a big wake-up call to most nations going, we're very sensitive in the global financial system because everything's flowing through the US dollar. And if you look at a country like Russia, what that woke up was, we have a real strategic need as a nation to own a sovereign asset, something that a country like the US can't shut us off from. And there's really only one with any scale that allows them to transact still, and that's Bitcoin. Bitcoin's a great tool for settling trade at a nation state level. It can handle the vast amounts of capital that need to move in those transactions. So if I'm the US, the way that I look at that is, no asset has been the reserve forever. It's always changed. So if you are the reserve currency in the world today, you need to look at how confident are you that innovation is not going to create an off-ramp for all these other countries to separate themselves from the controls you have on them today. And I see Bitcoin as being that threat. And if that's a threat to the United States and to the dollar, your best way to neutralize that threat is to participate on a proportionate scale to your influence in the economic world today. So I would take a hard look at all my other reserves, particularly the gold reserves, and I would look at whether we should just be shifting those over and converting them into a digital type of reserve. And I think that's the easiest way that they're going to get this done in a short period of time. But I think that there's a ton of creative solutions that are coming out, and I'm very excited. I think they had 60 days to develop their strategy for doing this. So I'm going to be very curious what these guys are uncovering, because, you know, Lutnick's a guy that absolutely wants to be buying Bitcoin. He's personally invested in Bitcoin. And so I have zero doubts that they're going to find ways to make this happen. I think the US will be accumulating, and I think they'll be doing it this year.
Yeah, we're of the same opinion. So Ben, for the sake of time, and you're pretty self-aware of this, I've heard you joke about it, but you're pretty well known for giving these long, thoughtful, long-winded answers, which obviously is needed when we're diving into these nuanced discussions on Bitcoin and MicroStrategy and securitized Bitcoin and Bitcoin equities, all this stuff. So for the sake of making sure that we can get to some of the questions that we wanted to make sure we got to with you, we actually created a speed round just for you. Call it like rapid fire, one answer kind of questions. So I hope you'll, bear with us here. So I'll go ahead and kick it off. And Mason, I think you're ready. We're going to kind of be switching off every couple questions here. So again, the point here is just kind of to move quickly. If when we get to the end of it, you want to shed light on any of these more particular, happy to spend the extra time. But here we go. Are you ready?
I'm ready.
All right. What's more bullish for MicroStrategy? Entering the S&P 500 or receiving a AAA credit rating from all the rating agencies?
S&P 500.
In the long term, who will have the lower borrowing rates? Spot Bitcoin holders who are posting it as collateral, or Bitcoin ETF holders who are posting their shares as collateral?
Spot Bitcoin holders.
True or false? The growth of Bitcoin hash rate from here is irrelevant because the protocol is already sufficiently secured.
Ooh. I'm going to say false.
What one person, if they became publicly bullish on Bitcoin, would have the largest impact on price?
Trump.
Tim Cook.
True or false? Will MSTY be one of the best performing dividend ETFs over the next decade?
False.
Which S&P 500 company do you think might be the next to buy Bitcoin?
Meta.
Which state will be the first to get their strategic Bitcoin reserve fully passed?
Michigan.
Which country will be the next to establish a strategic Bitcoin reserve?
China.
will Senator Loomis's Bitcoin Act, which wants to acquire 1 million Bitcoin, will that pass at some point during the current administration?
Yes.
How many Bitcoin will the US hold, by your estimation, by the end of 2025? If they hold 200,000 now, if we're assuming that they have those 200,000.
400,000.
End of your Bitcoin price.
215,000.
End of your MicroStrategy price.
725.
Oh wow. Okay. That was it for the speed round, but I'm surprised only 725 on a over 200K Bitcoin. Maybe explain that a
You
bit.
didn't ask for the peak price. You asked where it would end at the end of the year. So.
Oh, okay.
but yeah.
Okay, so if on December 31st though, what'd you say, 230? What was the Bitcoin price there?
Yep, 225.
225. So on December 31st, if we're at 225, you see MicroStrategy in the 700 range?
If we end the year at 225, then it'll probably be higher than that. It would probably be in the, I would say in the mid 900s would probably be my guess. But I think that when I look at that, I still view it in traditional Bitcoin cycles. And what can happen a lot in the Bitcoin cycles is you get these massive blow off tops at the end of a Q3, early Q4. And I like to allow for people to start panicking around that a little bit. So the end of the year, I could actually see as part of that period in time, because these cycles, particularly in the retail community, which is a significant part of MicroStrategy, they can become self-fulfilling because people believe so much. I personally believe in an extended cycle, just to be clear. I actually think it's going to keep going. I think that we aren't going to see a traditional top like we've seen before. We might see some small version of it. But from the retail community, a lot of people have been in this for so long, and it's just become so ingrained in the ethos around the 4-year cycles that I think you start to get a lot of preemptive selling that happens going into the end of the year by people anticipating a bear market turn. And I think that you'll see an outsized impact of that in equities, which is why my price that I target on this is actually lower than I think a lot of people would expect, is because those types of reversals, when you look at what people talk about with the multiple to net asset value, it becomes a sentiment indicator, essentially, if the market is the way that I look at it. So you see these expansion periods when everyone starts getting really, really bullish on Bitcoin, and then it contracts, and it can contract pretty fast when people start going risk off and they're not as confident about Bitcoin. And I can see that happening at the end of the year. Now, the US, if they are actively buying going into the end of the year, I think all bets are off. Then I think my 225 could be very low on Bitcoin. I think my MicroStrategy could be very low. So I like to leave a lot of room for that. I'd rather be disappointed to the upside than the downside. So I try to make sure any targets I'm ever going to have, I think are really achievable for both my personal investing and for anyone else who listens to me. I don't like to do the parabolic estimations, because I think that there's a lot of people that can get lazy in their investing and try to just trade around that, which is not a good practice. The other one, where I said Michigan, I don't actually think Michigan's going to be the first, but I was in Lansing, our state capital, talking to one of our state representatives yesterday about Michigan's Bitcoin bill. So I'm very bullish on what they're doing here, and I do think that they're going to get it passed, but they might not be first. But I like to cheer for the home team.
You know it's going to be Texas, right?
I know it's probably going to be Texas, yes. I can't give you that win right out of the gate. I got to cheer for the home team.
Things happening in Wisconsin, too. A lot of activity there, apparently.
And Arizona, right?
Yeah, in Arizona. So Ben, there were two there. I'm kind of glad we did the speed round, because there were two that kind of surprised me as far as your responses. So maybe those will be the ones that are worth, you humoring me and us sussing out a little bit more. So sure. When it comes to choosing, you chose the S&P 500 over AAA credit rating to MicroStrategy being more bullish. Obviously, the passive flow into MicroStrategy's common stock, if they enter the S&P 500, is in the billions of dollars. But these bond tranches of capital, we're talking hundreds of trillions, and some of them can't actually participate until they see a AAA credit rating. So don't you think that theoretically the passive income, or maybe it wouldn't be called passive on that side, but the flow of capital into MicroStrategy would be more significant with a AAA rating as opposed to S&P 500?
It's certainly possible. I think you're going to get a broad scale re-rating on Bitcoin equities at some point. I don't know that they have to make it into AAA for that to be really impactful, which is largely why I said no there. Okay. The S&P becomes perpetual inflows as they grow in scale. And keep in mind, that doesn't mean that the stock price has to go up, right? You're really looking at the market cap there.
Right.
So it becomes the self-fueling inflow of capital that gets rebalanced in constantly. And you've seen the impact from companies that have gotten into the S&P 500 and just how impactful that can be to the equity pricing. Now, AAA obviously lowers the cost of capital for them, no doubt about it. Be a massively bullish catalyst, and it would also fuel the S&P side of the house. So when I look at it and I go, what do I think is going to be best for them from an equity price appreciation? And I'm looking more short term is what I'm doing here. I look at the S&P being kind of the ultimate validator for MicroStrategy as an equity, which is why I think that one's probably the biggest bullish catalyst to that price. I think that the ratings are just going to come. People are going to understand how strong of an asset Bitcoin is going to be. And because of that, you're also going to have more equities that would diversify their holdings into Bitcoin. So now you'd have many more equities that are also going to have a strong credit rating. So it depends on where you're at in the cycle. If they're already at a mega scale and they're using different vehicles that don't require that credit rating, then that's not as impactful for that part of their business. If they're issuing via these ATMs and all that kind of stuff, that's not as impactful in that type of an arrangement. So for the moment, I look at the S&P 500 as being the biggest catalyst that they could get right now. I'm not necessarily in the camp that it happens right away. I think that there's going to be some active resistance against them getting into the S&P 500. So we'll see what happens there. The other one that I saw some reaction from you guys was on MSTY.
That's my next one. My thought is maybe you didn't want to, vouch for it because it, maybe you just weren't comfortable promoting it. But yeah, if you could explain.
Well, there's certainly some of that. MSTY, I think it's been a great product, but I think it gives people this sense of stability that it shouldn't necessarily yet, because I don't think a lot of people understand what that yield really is. People are looking at it right now and assuming that they're generating 100% returns from their covered call strategy, and that's not what's happening. More than half of that return is capital return. They're just giving the money back to investors. It's not actually coming from the returns that they're generating out of that product, which is great while things are going really, really well. But if you get a significant and sharp pullback, it can be a real problem because you can get that NAV erosion out of that product. So I always caution when people look at that product and they think that that's the yield that you're going to get forever. I don't necessarily know that that's the case. Obviously, if Bitcoin goes on a straight up into the right trajectory, they can generate that for a very, very long time. But you gave a long time frame on that. Yeah, it makes me nervous on a long time frame like that for them to generate those types of returns. And that's what investors have become accustomed to. I know there's more products coming to the market that aren't going to have that same NAV erosion. So I view those as more pure products for a covered call strategy and generating actual yield, where you're going to get to focus on what the true yield generation of the team is. I think that's very important. When you see kind of the blending of capital return and yield, it gets a little convoluted to me, and that makes me nervous. So I've been in Misty. I don't hold a lot of long-term positions in Misty. Usually I'll buy them after the stock has a major pullback, and then I'll look for some entries on that, but I don't hold it long-term. But I know a lot of people that have, and they've made a killing doing it. So, but you're right. It's not something that I'm going to endorse because it does have that nuance that I just think investors really need to educate themselves on. And they haven't needed to yet because there hasn't been an alternative product they could go to. But eventually there will be. And I think that type of competition is going to create a much more informed investor base. And then we'll see. Maybe they're still the best. Maybe they're not. But time's going to have to tell that story.
That's cool. But anyway, let's go back to the S&P 500 thing. Wouldn't it be a shock to the system if our company entered the S&P 500 before MicroStrategy? Which I think that's more possible. And again, that's why I think we could beat it. We could beat MicroStrategy in terms of, initial shock there, price performance and all that stuff. And then if Ryan Cohen could do another offerings to buy Bitcoin at a massive amount of, Bitcoin, when Bitcoin comes down again, or just sell at the top and then come right back down, come right back up into the scale in that sense, right? Because if he is aware of this rainbow chart, as I think he is aware, then, it's a very good price point in which, to kind of gauge when is the best time to buy into Bitcoin. And so he was talking about end of year price for Bitcoin is around 200. And I think this is what he's talking about, where the band would be lower. So at this round, if you look at the yellow, see the yellow price range right there? That's around the price point he said end of this year. And even then, that's around 3x from here. If you were to do the calculation, that's a pretty substantial amount of money. I mean, I wouldn't mind if GME tried to capitalize on that and sell half of their holding. And it wouldn't do anything to the price per se, but if it goes up higher, of course, yeah, we end up being in a loss in that sense. But you could come back at a lower band over here to buy, because again, when people are selling, there's a sharp decrease of the demands there too. So, but like he was saying, because of the demand is so high, that there might be an extension on the bull run. So it might end up being next year, and it's going to reach that $500,000 by the end of 27. Okay. So that traditional 4-year cycle may not happen the same way, but the price will go up in terms of Bitcoin, right? We just don't know whether it's going to go up and then down again based on the 4-year cycle here. Just like this right here, where you reach the orange part and then come crashing to the blue region. Yeah. But like I said, if this cycle is more closely related to the next one right here, to this one right here, then it would immediately kind of parabolic to the red zone over here, which means that end of year for that super cycle is 400,000 to the red zone right away, and then come crashing next year. Yeah, remain to be seen. I mean, however Ryan Cohen could muster that, and I'm sure he has analysts. I'm sure we have a lot of analysts out there, technical analysis people on the team. Maybe he's consulting himself with the firms out there that tells him, hey, this is likely to happen. So be prepared to sell at $400,000 range. You see what I mean? So yeah, with that price point, it's going to, and could you imagine if our equity side of thing explode and end of year because of that as well? We could raise so much money, you guys. I'm telling you. You think $1.5 billion is a lot? Try $10 billion at the top. Yeah, it's gonna happen, you guys. When people are searching for yield, searching for return, searching for, safe havens, I know traditionally, I don't think people would be like, parking their money in Gamestop or anything. But with the balance sheets that they have, with the, the amount of Bitcoin that they have, it's setting them up for a very massive, activity on the trading side. All right. I see people fighting over here. Denmark. I read this part right here. Okay, Norway and Finland. I feel you on. Okay. Hello. Hope you're doing well, brother. Man, I mean 40%, that's way too much. Even like with the education there too. I mean, you could learn things from the internet more, I feel, for free. Why it costs so much? I would never know. I did the calculation. Sounds like you have around 1,000. Okay, 1,500. Well done, well done. 51, all right. Billionaire, okay, billionaire. All right, so that's good. But yeah, I mean, bright future for Bitcoin. Not quite sure what's happening today. Of course, again, a bloodbath. Just don't feel like you have a heart attack or anything. Of course, I had some this morning and massively regretting it right now. but it's okay. Just a couple of hundreds of dollars here that I was let me just put some, but it's okay. I know. It's for long term anyway. Now I feel like tomorrow I still have some dry powder left from option in GameStop, so I'm thinking perhaps I should slow down a little bit. Just in case it goes down to $60,000 per coins, I might scoop some, just a little, just in case it goes to $10 million next year. Who knows, right? I've got to have something, right? So that I don't feel like I'm regretting. Like, I saw Bitcoin at $60,000 and I didn't buy it. That's always a pain point of mine, right? Anytime, you see Bitcoins that it went higher and higher and higher, and nobody thought that it is cheap enough to buy. It's always expensive. I mean, I bet you anything, if you were here, you would have thought that $100 was expensive. Can you imagine thinking that $100 Bitcoin was expensive? And it's perpetual, you guys. Like, when you see anytime, imagine that your sentiment, right? The sentiment is like, this is the most expensive spot you ever buy, right? But then, like, if you look at the history of price action, right now, it's the cheapest way, the cheapest historical price action to be buying. Yes, I know, it could come down, way down over here, but it doesn't like to stay out of this window of rainbow here, okay? And I don't imagine it just trailing like this till the end of time at all without anyone interested in buying it, right? Even though, this chart is telling you through the halvening cycle and all that stuff. So, yeah. And how long? Yeah, so by the year of 2040, $10 million Bitcoin, you guys. Can you imagine that? And imagine how much money is being printed 15 years from now. A lot. I made a new personal high score. Oh, okay. 7,000. Oh, wow. Somebody's loaded. That's cool. Anyway, it's been a long, oh wow, 2 o'clock already? You guys are crazy. Well, I hope you guys are entertained watching Bitcoin goes down in price. I know people are cheering for MicroStrategy to go down, and in 3 hours we have an overnight market from Robinhood, so I'll be watching out for that one. We'll see if there's gonna be a thumper motion from Rowan Kitty. Who knows? Assuming. But yeah, always fun to see those. One of those, right? What else? There's different chart out there that indicates, yes, this is a buy zone for sure. Okay. Different illustration of chart, I would say. People are expecting 62,000. Okay, that's again the dip and then rip. Dip and then rip. But don't freak out. I'm telling you. You're gonna see red for a while, and it's not going to be there for the rest of time. Okay? It's gonna resolve. They already announcing tariffs, 0 tariffs now. So hopefully the market's gonna react to that news. But as long as, fear in the market, people probably don't care anymore. They want out of the market. And so that's precisely your opportunity to get in. As far as the S&P 500, it's going to be in the news for quite a bit. So be ready for that max fear. But this is a result of being turbulent time, you guys. This is probably what is happening. This is their Dalio, principle of empire rise and fall, and it happens close to 250 years or so cycle, and we're getting to the U.S. reserve currency going down. Okay, not to say that the U.S. cannot fix this, and it seems like Trump is trying to fix that by bringing Bitcoin into the reserve currency, and maybe XRP too. So I don't know if it's going to be successful, but it depends on how people are going to think of it, right? So that's a good thing, in my opinion. If you know how to position yourself in that environment, you will be able to be okay. Okay. And then with the legislation on the Stablecoin Act and all that stuff, it's being resolved. Stablecoin usually will buy into Treasury to keep a reserve so that, they could issue more of their tokens in the dollar amounts. They have to have a reserve, proof of reserve, and all that stuff. That takes time, you guys. Takes time, okay? Might be two months from now, you would see it starting to turn back up. So hopefully it's a little bit quicker than we expected, than I expected, so that people don't have a heart attack, okay, when they see their portfolio red for a while. And I'm telling you, it's the hardest time when you see the portfolio red and to add at that valuation, but typically that's the best time to add, right? Now I'm not talking about the SPY. Obviously, I feel like the SPY has a little bit more room to drop. But in terms of a GME though, the price action we've been kind of beaten down for a long time. So it's refreshing to see that when the market come down on Friday, we were up 11%. So that's if the trend keeps going that way, they're gonna bring a lot more eyes onto the stock again. Even though at the expense of Bitcoin coming down as well. So we'll see, right? Hey, if the stock goes up while Bitcoin comes down, even though we invest in Bitcoin, guess what? We're gonna buy Bitcoin at a cheap too. You see what I mean? It's like, I'm telling you, the safety net that we have in our company, it's built in so strong that no matter what happened, you're protected. Okay? It's crazy, you guys. So I don't see anyone freaking out here. Oh. Okay. Ryan just trolls again. Kramer saves the stock market by predicting Black Friday. So he's aware of Kramer, reverse Kramer, and all that stuff. So maybe, again, this guy's always been wrong about everything. So I wouldn't be surprised if tomorrow, it skyrocket. The evidence is the news that came out, where every country right now are dropping tariffs like crazy. So of course that news is gonna seep in. With that uncertainty, people who are heavily exposed to the downside of GME is gonna have to rethink their position, right? Not to say that they're gonna close every position they have, but a portion of it needs to at least deleverage, so that they're not, causing any trouble in the market. But who knows? Can they contain this? I don't know. It's remained to be seen. Depends on how strong their capital is. Oh my goodness. Oh, this is so funny. Get the meme. My goodness. No. Try to Bitcoin Maxi. And then we're just like playing with it. Oh my goodness. People. Yeah, we're invincible. We're invincible. All right, you guys. Of course, always expecting Ron Kitty to tweet, right? We'll see if he tweets today. Sunday usually is where he typically tweets. One tweet's gonna send this stock up for sure. Oh, Moran just posted something. Okay. That's his position. That's cool. Oh, okay. Is this a new... Wait. What? Wait a minute. Hold on. Oh, okay. I thought... I thought that was Roaring Kitty for a minute. Like, jeez. Almost gave me a heart attack. Okay. All right. I'll let you guys go. It's been a couple hours already. Yeah, thank you for coming. Appreciate you hanging out with me. And yeah, just keep an eye on the Bitcoin for a while. I'm sure tomorrow's gonna be red. My heart is just crushing right now. Of course, it has to be red, right? Life.